Petty Cash Fund. Before jumping into how the Petty Cash Fund works and its everyday application, we must first understand exactly what it is. The Petty Cash Fund is the amount of cash kept on hand to pay for minor expenditures, including postage for small mailings and the purchase of office supplies. The extent and size of the Petty Cash Fund vary from business to business. However, its operation involves the 3 steps of establishing the fund, making a payment from the fund, and then replenishing the fund. Let's go to step 1, establishing the fund. To establish a fund, the business will write a check, cash the check before placing the cash under the care of an employee, the custodian. Now let's look at Kathy's cakes. Kathy decides to cash a $100 check to establish a fund and gives the cash to her employee. On this date, Kathy would record the following journal entry. Step 2. After the fund is established, the cash is used to pay for any qualifying expenditures, with payment made in 2 ways. Number 1, cash is taken directly, or number 2, employees are reimbursed from the fund after they use their own money. No matter which way, custodians should be collecting receipts in order to monitor the amount of cash used. Step 3, replenishing the fund. To replenish the fund, the remaining cash in the fund is counted, and then the business will write a check to return the fund to its original balance. The business will also record all expenses with the saved receipt. Let's go back to Kathy's cakes. On the 21st of May, Kathy examines the petty cash and prepares a petty cash replenishment report. Here we can see Kathy has $10 left in her fund, as she has spent $40 on office supplies and $50 on postage. These reports show that to replenish the fund, Kathy needs $90. Kathy then creates the following journal entry. However, when a business finds a difference between the amount of receipts and the amount needed to replenish the fund, this is charged to an account called over and short, which can either have a debit or credit balance. To understand, let's go back to Kathy's cakes. Say instead of having $10 left over, Kathy has 7, shown in the replenishment report. This would show that now $93 is needed to replenish the fund, but there is only $90 of receipts. The difference would then be charged to the cash over and short account, debited in the following journal entry. Thank you, that's it. Bye.